Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's March 29th. This will be our chart lesson for the day. And again, I thought I'd start out by showing you the daily chart. And we are, this thing just continues to shoot higher. We shot right through the resistance from the measured move, and it looks like there's probably a minute or so before the market closes. So it looks like we're going to close above that mark. So this thing continues to go higher. This has been a fairly nice rally, to say the least. If we back out here, you can see we're headed back to test those all-time highs. It looks like our next target would probably be this resistance here, and then the highs. So what looked like a really negative point at one time looks really positive now. So we continue to become more overbought. So you can't argue with that though, and don't. This market, we could make another leg up just like this original one here, or we might even make a new high all in one move here. I mean, it's possible. We could even go higher. So never argue with what you see. We had a trend up that just folded over into a flatter trend, and as of right now, this flatter trend's still in play. So stay with it. As long as it's there, stay with it. So it's hard to argue with it. But anyway, I wanted to give you that look at the daily just so you can see how impressive this was. This is a really impressive rally, and today was a fairly impressive day because there's a gap on the chart today, and prices couldn't even fill that gap. There's just too much buying coming in. So anyway, let's flip over to the 2000 tick chart, and we'll go through that real quickly. Okay, here's that chart. We did spend maybe from 9 o'clock to about lunchtime just kind of working sideways here. We really trended up, and I thought we were going to make a measured leg down here like this one, but we found support down here, couldn't get through that support, and prices rocketed off in the other direction, working on a measured leg up. We didn't quite get that. It looks like the market's closed now, so I don't see us. We're not going to make that target, at least not until the after hours if we make it. But just to show you the gap, if you look, here's yesterday's price action. Okay, I had an interruption there, but you can see this was yesterday's price action, and this was that late afternoon rally. But there was the high from yesterday, and we opened at 8:30. We opened here, so there's a gap between here and the high yesterday, which is where I drew that line. So, and you can see prices never got back down there to fill that. We found the support right around here, right across here, right around 45.90, and we rallied off of that. So, interesting day, to say the least. Let's zoom in here and let's go through the trades. All right, 7 o'clock came just as we're making this pullback right here. And so you got a new high. You traded up into this. So generally when you trade up into a range, most likely it's going to succeed on a breakout in the same way it traded into it. So that would be up. It's not 100%, but that's generally a rule you can look at and kind of expect. And if we'd have traded down into this, here's the one we traded down into this little range, and we went lower from there. Here's one we traded down in that we actually failed out the high side. So, but that's because we overshot this channel and we bottomed out here. And prices still tried to retest that low, but they rallied for quite a bit before we got another retest, and that was the lowest point we could get. We really never made a new low, but sometimes on an overshoot like this, you don't make a new low. But anyway, let's go back to the trades here. We made a new high. You get a pullback, first entry, pullback, and that's a second entry long right off that key entry point. That's a great trade that you want to, I mean, that's just right out of the gate. That's almost a picture perfect second entry on a proven key entry point, and look at that move. I mean, if you can catch that one trade, that's the only trade you need today. That's a 17-point move. So if you catch that one trade, you can wrap up and be done by 7:25. I mean, that's how many jobs could you go into 7 o'clock And on a single contract, let's just say you're trading singles. You made $800 this morning in 5 or 10 minutes. You probably wouldn't have got $800, but maybe you traded two contracts, so maybe you made $1,200. I mean, it's as good as it gets. It's not easy getting there. Don't take this. I don't want anybody to ever accuse me of saying this is easy, because it's not. But once you understand what we're doing and you understand how to read this chart and understand how to read the price action, it gets a whole lot easier, whole lot. But it's you're not going to get there tomorrow. You're not going to probably get there in next year. If you're just starting this, you're probably not going to get there in the next year and a half. It's going to take you a couple of years probably, at a minimum. And it depends on how much of the wrong stuff you learned first. Forget everything you've learned, because 99% of it's just hogwash. I'm sorry to say that, but it is. Even very expensive books and stuff you read from traders that are supposed to be proven, experienced traders. A lot of those guys, their pockets are deep enough that they're not wrong very often. Me and you aren't like that. If you're just an average retail trader trying to make a few dollars here and there, you don't have pockets deep enough to ride out huge corrections on a daily chart. You just can't do it, because it'll wipe you out. But some of these traders their pockets are so deep they can never be wrong, especially in a strong bull market or a strong bear market. They can ride out those corrections and hang on to their right. The average retail day trader can't do that. So don't believe all that stuff you read. If you're trying to trade with a small account and just make a few dollars every day, don't get me wrong, you can get rich at this. You can become very wealthy, but you don't do it. It's not a get rich quick scheme. So make sure you understand that. You're treat this like a job, and come in and take your salary every day and pack up and go home, and eventually you'll get there. And it'll probably be quicker than you think it will. But don't think you're going to come in here and buy a manual or watch some videos, and then in a month or two or a few months you're going to be making thousands of dollars a day. I don't care what anybody shows you. If you can't read this chart, you're not going to be able to do that, and you're not going to learn to read this chart overnight. It's like learning any non-native language. If your native language is English, you're not going to learn Chinese tomorrow, and you're probably not going to learn it in 6 months, or you're not going to learn Russian in 6 months. You're going to have to immerse yourself in it and practice and study and go with it every day, and then go try to use it and immerse yourself into that language and that culture to really become fluent in it. And learning to read this chart is exactly the same way. You're learning this chart speaks a language, and you got to learn it. You got to learn to read it. And it's no easier than learning to read Chinese or learning to read Russian if you're an English only speaker. So make sure you understand that. So I didn't mean to get off on that tangent, but anyway, this ran straight up, and we corrected back, and you can clearly see the trend coming back. You get finally get a convincing close outside that trend line. We tried to make a new low, we couldn't. We come back up here, we tried to make another low. So there's a failure right there. I wouldn't trade that. It's too sideways. It's too iffy. Just kind of wait, and then you get another. You could probably call that a triple test, maybe. But again, it's just too congested. But when it comes back and tests it again, it gives you this big, huge bullish bar. If it breaks higher there, we're probably going higher, because that's definitely a triple test now. And that's definitely a nice signal bar. You might have entered on this one. I didn't mark it because it just looks too congested. But finally you break higher and pull back and then go higher. And that's what the smarter traders are waiting on. I didn't draw this here, but you can clearly see there's a small congestion, and all congestion is a micro range. And most breakouts fail before they go on, and you can see we traded up into this one. It failed on the breakout originally, came back, tested that low again, and then went higher. And that's pretty typical. And this was another great move. If you catch this one move again, if you didn't catch this one, if you'd have been here at 8:30, you could catch this one. And it too is another 12 point, it's a 12-point move. So a great opportunity to come in right out of the gate and make you some money. But now you got a convincing close outside this blue channel, move to a new high, and it reverses. And we actually make one leg down, and there's a little two-legged correction there, so leg two starts right there. And we made pretty much a measured move down. It went a little further, but from there we started trending the other way. It's a weak trend, kind of a range type trend. When you're going back and forth above and below the EMA, you really can trade it both ways. Although there weren't many shorts here, so, but it's something you can consider. But anyway, we make a new high there after the break. You get a first entry, you drop down, you get a second entry right there that fails. I like going short right there. And it looks like it may have, I'm not sure if it broke higher here or not. The high is 1925. I think no, it's a equal high. Even if it would have broke one tick high right there, I'd just kind of look at that as a one leg down and then your next leg down. So you could count this either way, but it didn't break higher, so it doesn't matter anyway. I couldn't remember if there was one spot I looked at today that was similar to that. I don't think it broke higher. But anyway, failed second entry long. I like going short there, and that's another quick move. Drops down, and then we just kind of start working sideways here. This one's tempting. This is a first entry, second entry. It's really congested and sideways though, so I don't think it was worth taking. I didn't mark it, but then you get two legs back and you break out, and then you make a lower high here, and that's what you want to see at the top of a little range. And fairly small bar. I mean, it's like 6 ticks, so you can actually get in following the 8 tick rule. So that's a second entry short, and you got all that room, but this thing just kind of takes off. So that would have been another great entry. There's actually 2 legs down there, and you correct again. You run up here and you actually get another second entry. I didn't mark this one. You could have gone short right there, but that bar is so big and it looks a little sideways there. I think you're better off to wait, because it looks like this trend is played out and you don't have this blue trend yet. So the way I ended up finding that, I drew this off of this and drug it up there. So when it turned down there, I mean, you could have actually found this trend, but it's not confirmed. It looks, notice how that's bouncing right across there. And in the end, I was right, because it bounces off there. So I haven't talked about this in a while, but you can find the trend lines off the lower side sometimes when your upper side is not consistent. And that's how I found this line. I drew this trend backwards. I drew it off of all these lows, and then I pulled it up to the high right there. And lo and behold, it turns down right at it. Now, if you were able to do that, you might take that trade. But again, that's such a big bar. It's 24 ticks that you might wait on the lower high. And the lower high comes right here. Very bearish bar, great entry. Then you get a failure. The problem with the failure, the only reason it's green is because there is some support there. But this is a pretty good trend, and we're looking for a measured leg down. So you got a lot of room to go yet. So you may risk that one. This was the ideal place to enter here, and you probably get a runner on that trade. And then we drop on down for the measured move. I don't see anything else in here I would have risked. And we get the overshoot, and we're just kind of chopping along. I don't think you want to go long in here. We just kind of go into this range, and finally it breaks higher. You run up here, make a new high, and it sets up this green channel. Because it does confirm the trend line right there. No entry there. And then you actually get a second entry here, but hopefully you didn't fall for this. There's still a possibility we're going to try to retest that low. Even though we overshot it, we could still retest, but a lot of times on an overshoot, you don't get a retest. But you don't know that it's going to happen for sure, so don't take a long right into the EMA when prices shot through it that easily. That just went through way too easy. So I'd be looking for a failure here, and you get it right here. And you don't get much more than that. You can see they ran the stops, and then it bounced, and you get a break of this green trend. And I don't know what happened here. It's just a huge sell order must have came in right here. Maybe most of these people that got long here had to give up and decided, hey, we're on the wrong side when it went lower. And then once all that selling dries up, then it bounces again. So that's what happens to you. You know, you get long here too early, and suddenly you think you got to exit, and that's the only thing I can guess is that's what that probably is. Either that or uh, uh, somebody just unloading a big order there. But that bar was swift and decisive. I mean, it's very bearish, and it probably ran most of the longs of the people that got long right there. We make a new low, and we're bouncing out of there. And you actually get a second entry long right here, but the signal bar is no good. You might look at that as a failed second entry short and take it based on that. But when this closed below the EMA, even if that breaks higher, I just think it's too risky. There's a lot of indecision right in here. It's hard to know what prices are doing. And that's why it's just doing what it's doing, because people, there's still half the crowd that thinks we're going to make a new low. And then the other half of the crowd thinks, hey, it's time to rally, and they just kind of duke it out until finally one side wins. And you can see here where it's very weakly going up, very weakly. Another pullback there, and then finally we can't get back up to the yellow side of the trend channel, and you get your break here. And you just end up going sideways. And again, you get that big bearish bar out of there. Again, the longs may have got worried right there and have to exit. And then once all of them exit, it rockets up again. I mean, we see this a few times in a row here. And then we run up here, and finally you get you're coming back down here. This is actually a failed second entry short. Notice the new low, first entry, and then second entry. Even though you made a higher low here, you never broke higher up here. So the failure didn't occur till right here. And that's a nice reversal signal bar. It did bounce right off the midline. And we haven't reached the highs yet. So I like going long there. It's a little aggressive. It's a little sideways there. But you can see it turns out to be a nice trade. You probably can't get in it because it gaps over and it never really backs up very much. I mean, if you'd put a limit order one tick above the signal bar, you might have got filled on it, but otherwise you wouldn't have got filled on any kind of limit order back inside this bar. So it was probably difficult to get in. And then we get a little overshoot on the upper side of this channel, and the bottom just falls out. There's a lower high here, but you can't really trade that. Then there's a failed second entry long here, and look how bearish that is, but look how congested it is as well. And then we get this little break outside. It's about equal to that. So when it breaks higher here, I like going short. That's just going to trap people because it's right at the key entry point, and I guarantee there's some people that just said, hey, look at that bullish bar right at the key entry point, I'm going to take it, and they get trapped. If it breaks lower right there, it's probably going to drop on down, and that's what happens. And we actually drop down and test these lows from earlier. You do get a break here too, and a new low on this. But you can't buy this down here. I mean, it's very tempting, but look how congested, and trying to pick bottoms. And really here, I thought there's a possibility we were going to make that measured leg down based on this whole big move here. Didn't happen, but you can't rule that out at this point. It bounces, and it looks like we're going to go higher, and it drops again. I don't see anything. It's just, again, prices, you just kind of go into this indecision area. People aren't sure what's going on here. There's too much buying keeps coming in down here, and every time it bounces, people want to sell it. So you might have looked at this as a failure, but it closes on the wrong side. It doesn't really set up right. You get a triple test here, but signal bar is no good. You get a higher low here, but it's right into resistance, and the signal bar is no good. You get a reversal type pattern here, but it's not back to the EMA. You could argue that, hey, that's because it couldn't get through that trend line. And if you if you see that, then maybe you take that trade as a failure. And it just keeps working up till you get a break, new high, and then you turn down. And then you'd want to draw this trend line. There's no setup there. Now, this was a really good rally, and there's not many setups on it. We run up, and then we just kind of work sideways. And notice you got it test 2, test 3. That's not a perfect signal bar, although it is a triple test, and it is a little congested area, but that's a key entry point as well. And it's got strong support there. So you might go long there, just trying to get a scalp out of it. You don't know that it's going to take off like that, but it's something to consider. And then it finally gives us one more second entry long right here, right off the key entry point, and I like that one. And that took us into the close, and that kind of wrapped up this final trade here was a little tempting. And you might argue that there's a triple test there, but it's so close to 230, and it's right into the highs here, and we did get a break of the channel. So I think it's too risky to enter there. So that's how I saw it today. 2 legs up. We didn't quite get that measured leg. We're close, but we didn't quite get it. So, and as I showed you on the daily chart, this thing, we're really getting into overbought territory, but you can't let that, you have to be concerned that at some point there might be a big drop, a big sell-off, but you can't be concerned about that and let that influence your trading. Wait till the chart shows us there's a big, it's going to sell off. So there's, right now this thing's just going higher. So again, if we go back to the other, you can easily see here, this thing is just rocketing up, and this trend line is still in play. So will we go higher? I don't know. The chart says we're way overbought, but at the same time, there's still possibility of going much higher. So we'll just have to wait and see. But anyway, I'm going to wrap it up for today. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you.